What's going on, guys? It's GBP, baby. Welcome back to another weekly review. I hope everybody's doing well. And yeah, so this week we have high impact news on Tuesday, Wednesday, Thursday and Friday. So I am expecting quite a lot of movement this week. With us coming to the end of the month as well, I wouldn't be surprised if we were to stay in the range that we've created. And I'll explain what I mean by that. So this is our current trading month, and you can see how we've now traded down into a nice pool of liquidity on the monthly. So these relative equal lows, so the low from April, May and June, we've now dipped down into that sell side liquidity, and then we've come off it. With that taken into account, as we drop down to the lower time frames, you'll see how price has treated that liquidity pool and how we've responded to it, and why we should now expect us to probably and more than likely start to pull back into the range of the current month. So I'll talk more on that once we get down to the weekly, but first I also want to bring our attention to this long wick. Now, if you've been watching and following along, you'll know that I did want to see if we could reach down to this 50% level. The fact that we traded to the 25% level and have reacted off of it like this, after grabbing this south side liquidity, says to me that it's likely we may want to again retrace back deeper into the range of the current month, which is completely fine. Another thing to take note of is this implied fair value gap right here between this high and this opening price. If we drag that right through, we should treat this as any fair value gap, meaning that once we're above it, we should expect to find support on it, and if we're below it, we should expect it to find resistance. Again, we've clearly traded through it, but then come off it. So as we drop down to the lower time frame, we can take a closer look at that. But until then, let's get that 25% level marked out just so that we can refer to it on the lower time frames. We'll make this blue, and I'll put 25% level monthly wick. Move it to the right, and then we also want to note that this is monthly south side liquidity. So with that in mind, let's now drop down to the weekly, and here is last week's delivery. If you watched last week's videos, you'll know I wanted to see a down close week, and we didn't get given that. So what does that mean for us? Well, it obviously means that the market's trying to do something else, and we can use that to our advantage because it will help us to frame where we want to see us draw to next. So remember, this is at 25% level, and this is what I mean by how prices come off it. We came down below monthly south side liquidity, grabbed those stops, and then came off it quite nicely on the Friday. Here's that implied fair value gap on the monthly. Let me get that marked out. So if price retraces back down into that, I'd expect to find a level of support. So what does that mean now? Well, I am expecting us to push on higher, especially considering we have this massive fair value gap that's formed right here. So let's just get that drawn out as well. So here's that massive weekly fair value gap in the premium, and it'll be interesting to see if price can completely fill this gap in. So let's get that marked out. So whether or not I want to up close or down close week, ideally I want to see an up close week, and I'm saying that just because of how we did key off that 25% monthly wick. We've come down and grabbed that monthly south side liquidity, and volume is now respecting the implied fair value gap. So there's not really any reason for me to expect another down close week, especially since we didn't get given it last week. In terms of the lowest I want to see price trade to this week, it will definitely be the midpoint of last week's wick, and that's because if we are bullish, price shouldn't need to go any lower than that. In fact, we can even look at the 25% level as a potential low. But as we drop down to the daily and start looking at those levels at that time frame, we should be able to find PD arrays around these levels that we can use to key off. But generally speaking, my target for this week, as in what I'm mainly looking for, is for price to trade on higher and try and fill in this weekly fair value gap. Because if this gets filled, then it's possible we may need to start thinking about the next premium array. Other than that, I'm looking for this implied fair value gap to continue to provide support. And yeah, it's likely we are going to see quite a range bound week in terms of being within the monthly range and staying within that, especially considering it's the last week of the month. So let's now go to the daily, and you'll see how Thursday and Friday traded on higher, creating this bullish order block right here. We have Tuesday's high, which I do like the look of. I'd like to see if that high can get ran. So let's get that marked out as buy side liquidity. We'll get that marked out like so. And then now we can pay attention to this right here. So look at the delivery. We've traded lower, running out the sell stops, trading into the 25% level monthly wick, and then as soon as we traded into that, price traded straight off it in a flash. So as soon as we opened on that Thursday, price was running right back against itself and eventually has now closed above that Wednesday down close. So again, this is showing a willingness to want to go higher, and it's also created a bullish order block, meaning that the opening price of this bullish order block should be very sensitive. So let's get that marked out, and we can write daily bullish order block. And generally speaking, that should be able to provide support to send us where? Into our premium, which is that weekly fair value gap up here. If price trades any deeper than that, the lowest I want to see is again that 25. This is at 25% level from the weekly wick, but it's also 50% level of the daily order block. Let me explain that more clearly. So this is 25% level of the weekly wick. Let's write that out. 25% weekly, and we'll center that. Let's move it to the right actually. And then as we drop down to the daily, you'll see that overlaps perfectly with the mean threshold of this bullish order block right to the pip. So the midpoint of this bullish order block lines up nicely with that. So that's another reason why this should be a very sensitive price point if price is to get down there. And it very well could, considering there's going to be sell stops below Friday's low. And then obviously we have the buy side liquidity above Tuesday's high. And again, that weekly fair value gap we want to see try and get filled. So if we are to have an up close week, what does that mean for price? Well, it means that we want to see the low get created on Monday, Tuesday or Wednesday, ideally Monday or Tuesday. And that south side pool, that liquidity pool that's resting below Friday's low would be ideal for that, and would also line us up nicely with that 25% level from the weekly, wouldn't it? So generally speaking, it would be nice if we could get a simple week when we trade lower, create the low, and then trade on higher and reach for our weekly fair value gap. That's assuming that Monday doesn't just trade straight up into it. So this is another kind of environment where, and reason why I don't like to trade Mondays, because based off Monday, it's going to change how I want to see the week deliver. Because if Monday trades higher and we're already reaching into our premium PD array, that may mean that we may get a midweek reversal. However, if we are trading lower off Monday, it's more in line with us, and then we can get in on Tuesday and Wednesday accordingly. But nonetheless, let's go down to the 4 hour. Very simple price action right here. Kind of just entering a consolidation as we enter this range right here. Again, buy side liquidity residing above here, and this is the very lowest we want to see price trade. That means that this gap below that 50% level, we want to see this act as a breakaway gap, meaning that we do not want to see price trade down into that. So let's get that delineated as anticipated breakaway back, anticipated breakaway gap. And basically, we just don't want price to come down into that. If it manages to reach into that, we may be way more bearish than we anticipated, literally. And then that means that we can start thinking about lower prices. But unless that happens, so unless we disrespect this 25% weekly, then I'm happy to remain bullish on the dollar. We have this nice fair value gap in the discount right here. So it'd be nice to see if price can trade down into that to create the low, like I said, and then potentially trade on higher into our buy side targets. But again, I think it's best we do just let Monday trade, especially considering there's no news tomorrow. And then from Tuesday onwards, we should be able to get a better idea of where the week wants to take us. So the fair value gap's between there and there. Let's go to the 1 hour just to take a closer look. You can see we've just gapped lower. I'm not really focused on that right now, but generally speaking, that's how I'm going to be watching price. So yeah, hope that all makes sense. It is just a matter of letting Monday trade, to be honest, and then see how it treats it. And then from there, we should be able to frame the rest of the week. So let's now head over to GBP USD, and we will start on the month. We'll take a look at the monthly here as well. And you'll know that we've had quite a bullish month on pound. We've ran out monthly highs, clearly. And then we've also traded up into this wick above the 50% level and came off of it accordingly. So if we're expecting dollar to retrace back up into its range, that means we need to expect pound to retrace back down into its range. So let's look at the 25% level and 50% levels of this range, and we can use these again to help us as we drop down to lower time frames. We may be able to find PD arrays that are lying around these levels that can help us find setups. So this is 50% off. This is consequent encroachment, off a monthly wick. There we go. And then in terms of where we want to see price return, it's going to be between this low and this high. So it's going to be anywhere between here. We're looking for price to retrace, and one likely place, which is where price always tends to return to, is equilibrium. So I am going to mark out equilibrium of the current month, just because again it's the last week of the month. We're expecting a retracement back into the range, and equilibrium is likely going to be where it would want to draw to. So I am going to mark that out, and as we drop to the lower time frames, we may find some PD arrays surrounding it that we can use as targets. But let's go down to the weekly, and you'll see how we trade up to that consequent encroachment, and look at the volume. This is my first time looking at the weekly on pounds since last week. I didn't realize we closed on a low. That's very interesting. But yeah, look at that. Absolutely crazy how volume's respecting that monthly consequent encroachment. You can't make that up. So again, what's price telling us? It's showing us it obviously wants to retrace to some extent, because it's refusing to be in that premium. It's refusing to be above that consequent encroachment, which is completely fine. We ran out stops above this high, so there is buy side liquidity that has been grabbed, meaning that now we need to find some kind of internal position for us to trade down into. So between this low and this high, there is obviously this massive fair value gap. Do ignore the current trading week, which is this. Ignore that for now. But now there's this massive fair value gap to fill. So again, it'll be nice to see if we can fill all of it and trade right down to that mean threshold. We will drop down to the daily and hopefully have a more clear view on price. And as you can see, that that equilibrium I was talking about lines up perfectly with another fair value gap. Purely because that weekly fair value gap's too big, I'm going to get rid of that, and we'll just pay attention to this. And this is the discount which I'm looking for pound to trade down into, assuming that dollar is going to trade on higher and reach into its weekly fair value gap in the premium. So I hope that all makes sense. It'll be nice to see some more downwards price action. But again, if we're expecting a down close week, that means we need some kind of premium to be made. So we need the high of the week to be made. Where can that high be made? Well, let's look at all PD arrays in the premium that price may want to trade to. Very weird price action. We do have a fair value gap right here. It would be ideal if that was left open though. And we have this bullish order block. So let's get this fair value gap marked out in the premium. We'll make that red, and then let's drop down to the lower time frame, because you can see that price action isn't too neat on GBP USD currently. So there's this high right there. There's that fair value gap I was talking about, which is also matched on the 4 hour. So again, high probability. And then we also have a breaker, high, low, higher high. If we look at this last down close candle, that's coupled nicely with this fair value gap. So even more reason why it'd be nice to see if price can trade up into that first. So maybe on the Monday, Tuesday, Wednesday, to then trade lower later in the week, targeting sell stops below here, and then trying to reach down into our daily discount, which is what we were looking to get traded to, or that equilibrium level I was talking about. But yeah, again, this is definitely a matter of letting Monday trade. We really just need to let it do its thing, because as I was saying, like on dollar, price may run lower first, and then we see the retracement higher, and then we get a reversal. So we just need to let Monday trade, and then Tuesday will be a lot clearer for us. So if you haven't subscribed already, make sure to hit subscribe, and then you won't miss any of my videos this week. So that's everything on pound. I hope that all makes sense. But generally speaking, we're looking to stay between this being the highest, and I'm looking to see if this can be our discount and our target for the week, assuming that dollar does want to trade on into the premium. Finally, we're going to finish up on Euro USD. I did do some back testing on Euro USD, as you can see. This was all done live today at 8 p.m. If you didn't manage to join it, you can go and watch the video. Just go onto my videos and click on live, and you'll see live back testing from today. So definitely go check that out. And if you don't want to miss it again, make sure to hit post notifications, and I should be doing another live stream this week, Sunday as well. So do stay tuned for that. Until then, I am going to clear all this. Let me make sure to get the screenshots. Right, cool. And now we're going to start on the monthly here as well. So same again. You'll see that Euro's a little bit more clean in terms of delivery, in line. Like it's more in line with how dollar's moving, which is always nice to see, and it's pretty typical of Euro. But nonetheless, we've taken out monthly buy side liquidity, and we've came off it just like on dollar. And you'll see that that level is marked out nicely with the 50% level as well. Very coincidental. So now we're expecting what? A retracement back into the range. Where in the range could we trade? Well, we have this whole month of July. Let's now look at the midpoint, and remember, we expect, if you study price enough, you'll see how often price returns to its equilibrium. That's the only reason I'm looking at equilibrium. It's not like it's guaranteed to go there, but it's a nice target that we can use to figure out, okay, if we're going to retrace anywhere, considering we've taken out buy side and we're not going to make another low this month unless something crazy happens, then where would it retrace to? And it's likely going to be equilibrium off the range. It's possible we should be using this low to this high, but generally speaking, we're looking around here. But as we drop down to the low time frames, it'll be much more clear for us. So let's go down to that weekly. And again, ran buy stops into a rejection block level. This is a rejection block right here. What happened? Price got rejected off it. Gorgeous. So now we're expecting a down close candle because we want to see, okay, can price retrace back into its range? Just like dollar, we have a clear fair value gap down here. I'm looking for this to get filled. And then the very highest I want price to trade is going to be the 50% level off this wick. Now, even that is quite a stretch for price. If anything, that 25% level, which lines up with the buy side liquidity from the monthly, would ideally be the very highest. So I will have them both marked out, and as we drop to the daily, we can take a closer look. Generally speaking though, as soon as we trade back above the open of last week, I'm seeing that as a very high premium, and I'm expecting price to reject away from it to then send it lower, where into our discount PD arrays, those being this fair value gap right here, the weekly, and then if price wants to get, really wants to move a lot, it will run for this week's low, which is completely fine as well. So let's get that marked out, south side liquidity. And if we do see price run into that south side on dollar, we will likely be witnessing it reaching for this buy side, which is also completely fine. But for now, let's focus on this. Why? Because it's our first target for price. So that's everything over there. Let's drop down to the daily. And now we have a beautiful bearish order block. So we want to look at the opening price of that, draw that out, and we can write daily bearish order block, move that to the right. And it'll be nice to see if price can trade up into that and we find resistance to send it down into our discount PD array. It's really as simple as that. This massive up close candle, mean threshold of that, again, lines up with that 25% level I was talking about. That's the very highest I want to see price trade. So yeah, this right here, I'm going to get rid of it. I don't want to see price go there at all. This level is the very highest I want to see price trade. If we get above that at any point this week, then we're likely more bullish than I anticipated, and we'll just have to readjust. But generally speaking, I'm expecting this Friday high to get taken. And then I'd like to think, again, that would be a nice premium, and there should be a PD array between here and here that we can look for, maybe a fair value gap or something to probably key off. So let's drop down to the lower time frame. In fact, let me get this south side liquidity marked out for us first. And then let's take a look on the 4 hour. So here is a fair value gap there, perfect, lined up with that buy side. It's very possible we may trade deeper into that. That's completely fine. On the 1 hour, we may find some more PD arrays in this range. That's again completely fine. But generally speaking, I'm looking to see us retrace into there, and then I'd like to target that south side liquidity, assuming Monday does trade higher. If Monday doesn't and we trade lower first, it's fine, but it's going to have a harder time doing that, and we may have to readjust how we approach the week. But generally speaking, we know what PD arrays we want to see get traded to. It's just a matter of letting Monday trade and seeing how the week plays out. So let's get, that's fine. In terms of the fair value gap, this high to this low, I want to see that get traded to. That would be my discount PD array for price, and my general weekly target. Let's go to the 1 hour, and you'll see our price just a little bit consolidated right now. So what does that mean now? So Monday, again, let it trade. I wouldn't be surprised if Monday did trade lower and then we saw like a reversal to then go and create the high on Tuesday or Wednesday. That could very well happen, especially with how bearish we are currently. So we do need to take that into account. So we might find dollar does want to rally a little bit first before creating the low, before potentially reversing again. So it could be a week like this. Let me quickly draw it out. Like on dollar, we could trade higher, trade lower, create the low, and then start running for the highs. So we may need to let Monday and Tuesday have its time to do that. But yeah, it's just a matter of waiting. That's going to be everything, guys. Thank you so much for watching. Don't forget to smash subscribe, drop a like, drop a comment, and I'll catch you tomorrow. Peace.